today we're talking about recession, inflation. That's an interesting topic that everyone is wanting to hear about. So obviously you and I talked before this, and we both agree this isn't like 2008, 2009.
Sure. Yeah, in 2008, or pre-2008, I think we had different lending conditions. You had lenders that were giving loans out to people that
If you sneezed,
they should not have.
Yeah.
No doc loans. Basically, you basically you had a heartbeat, they would qualify
they
you for a
would,
loan.
yeah.
And
And you didn't even need to be from Arizona,
No,
like United
exactly.
States. You could be from anywhere in the world.
Exactly.
Basically.
And so people were getting loans, first loans on properties that they probably shouldn't have. And then a lot of people were getting home equity loans, taking out the equity, and then who knows what they were doing with the money. Some people were going out and buying other homes with it. Some people were buying boats with it and cars, which was not a very smart thing to do.
So it wasn't very controlled back then. Like
Yeah.
there was just no like control over, like all I saw was Arizona, but I knew like
what
homes
happened all over the country.
Yeah.
And after the crash, lending restrictions really tightened up, and so right now we don't have the same market conditions that we had back then, just because of the faulty loan system. So
Right, and we learned from that.
yeah, I think the lenders learned. A lot of lenders went out of business. I represented some mortgage companies and banks that are no longer in existence anymore because they were trying to scurry to file lawsuits and do foreclosures on a lot of their properties. And
The lenders were?
the lenders were, yeah, in 2008, 2009, and a lot of them just couldn't keep up. And the FDIC came in, and I represented the FDIC for a short period of time after the crash. And so the FDIC came in, took over some lending institutions' loans, and wound up doing the foreclosures. And so I did a lot of that between probably 2009, 2012, representing FDIC as a big client. So
The worst part was as an investor, we'd have property that we were flipping on the market. They were supposed to close on the loan. All of a sudden, we hear the lender collapse. The lender went out of business. So we're like, oh, shoot, now we have to, find another lender. And it was just a trickle effect. We knew overnight everything. You would hear every day, hey, another lender went out of business. We had loans with Washington Mutual back in the day, and like they were trying to take our properties that we had as investments. And
well, and I'm still seeing kind of the effect of that. We talked a little bit about how I do real property tax lien foreclosures, and I still will see every now and again an old loan from a company that's long gone, and we have to name that company in our tax lien lawsuit to wipe out the old loans. Because the deed of trusts are still recorded against the property.
Interesting.
So even though the lenders
13 years ago?
Yeah, so even though the lenders are not actively out there pursuing the loan, the deeds of trusts are still recorded against the property. So we got to, strip those off through our foreclosures. So yeah, I still see the impact to this day. So.
Wow. And as an attorney, John, what did you learn through that whole experience of the 2008, 2009? I mean, obviously there's movies now. There's like, that was historic, like The Big Short. We watched a number of amazing movies, but that was probably once in our lifetime, hopefully.
Well, hopefully. There's a few things that I learned during that period of time. One of them, for the benefit of property owners, Arizona has a pretty good anti-deficiency law. So if your home gets upside down, and this was happening a lot with people, they would buy high in the market 2016, 2017, then we had the crash, and then they were upside down in their homes. And so they may have lost their jobs, and they couldn't afford their mortgages. And again, people were getting into mortgages that were not 30-year fixed. They were maybe a 5-year ARM. Mm-hmm. And so, the 5-year ARM was becoming due. All of a sudden, maybe they were paying only interest only at a low interest rate. And then all of a sudden the 5-year or 3 or 5 year, whatever it was, would shift.
Kicks in.
And then their mortgage payments go from $800 a month to $3,000 a month. And so people were having to walk away from their homes or do short sales or modifications. And so one of the things that, I really learned from that was, we had a really good anti-deficiency law, which basically says homes that are 2.5 acres or less, single family home or two family home, and if you're upside down and you do happen to have to just walk away, that the lender can't sue you for a deficiency. And so that was one of the things that came out of that. We were able to parlay that into assistance with people with short sales and modifications, because we would negotiate with the lenders and say, hey, you need to take this short sale deal because you can't sue the borrower for a deficiency. And so we were able to.
Can you explain what a short sale is?
So
people that are watching that don't know.
Yeah, so we don't see a lot of short sales now, but that's all that was going on in 2010,
I remember.
2011,
Yes,
2012.
We bought some of those.
So short sales is basically where the mortgage is more than what the home is worth.
Okay.
And you're selling the home basically for less than the mortgage. And so you're shorting the mortgage. That's what.
So
what's
say
called short sale.
it's worth 300.
Yeah. So you might have a house that's worth 300,000, but the homeowner borrowed 500,000, and it was the lender 500,000. So
he's 200 underwater basically.
Yeah. So it was
what it's worth.
Exactly. So it was a 3-party transaction. So not only did you have to have a buyer and a seller, you had to have the lender come in and agree to
accept that price of 300.
Exactly.
Right?
To get the house sold. Otherwise, the borrower would either have to do some sort of modification or would have to walk away.
Yeah, and as an investor, I love short sales. Like realtors would bring me those, and
Sure.
we'd buy a bunch of them back then. But again, as the owner of that property, that would free them up to do, like, it wouldn't go against them, right? Maybe on credit, but the lender couldn't come back and sue them. Is that how it works?
So essentially, they couldn't be sued for a deficiency. The missed payments would basically come up on their credit report for a few years, but after, I think it's 2 years, 3 years, they drop off.
Okay.
Having some missed payments is better than having a foreclosure on your credit report, because that stays on there for 7 or 8 years.
Yeah.
And so the short sales was definitely the way to go. I know a lot of people did just bail. A lot of people just walked away, and I really wish those people would have talked to a lawyer at the time and
for sure
and learned about what their rights were. And I was doing a lot of that. I was doing a lot of short sale, modification, foreclosure consultations. Just people wanted to know their rights
because no one knew about it back then. And I actually was able to do a short sale, but I also had a property with M&T Bank. I don't know if you know who they were, but they were based out of New York. Mm-hmm. So I was working with all the paperwork, sending them everything. One day I get this notice, we foreclosed on your property. I'm like, you foreclosed?
Yeah.
What? I thought we were in negotiation here.
Yeah, that happened to a lot of people, yeah.
Took it right from me.
They would notice the trustee sale and then start the modification. And then, it was one hand not knowing what the left hand was doing.
Gotcha.
And so the right hand not knowing what the left hand was doing. And so you'd have one department trying to modify, one department trying to do the foreclosure.
Yeah, I'm like, what are you talking about? You foreclosed. I'm working with someone right now to get this modified, but that was painful.
Yeah, it was very painful. And unfortunately, during that time, you'd have lenders that would have a lot of turnover in their modification departments, and so one day you're talking to Jack, 2 days later you're talking to Ed.
For sure.
And so
it's like, didn't you just notate this in the computer?
Yeah.
And you'd have to start the whole thing over.
Yeah, and so
send us another package. Okay?
I had a lot of lawsuits during that time frame. A lot of lenders making misrepresentations, maybe not intentionally, but we had a lot of people who were promising. Like a lot of the lenders at the time would say, okay, well, you do a temporary payment plan. You make three months of payment.
I remember.
Good faith payments.
Yes.
And then we'll get you a modification. And sometimes the lenders would just say modification. They wouldn't really say what that meant. But people really needed a principal reduction. Sometimes they would get.
It was so scary. It was so uneasy too, because you may not hear from them for 2 weeks, and then it was just a lot of uncertainty.
Yeah.
Thankfully, we're not going to, have that type of situation.
I don't think we'll have that again. But the other thing that came from from that time frame was I learned a real estate investment tool that I didn't
Okay.
really know about. It was something I never learned in law school, but it's called real property tax lien investing. And so every property, whether it's vacant land, residential properties, or commercial properties, you have to pay property taxes.
Real property tax liens?
Yeah, real
Okay.
property tax liens. So if you don't pay your property taxes to the county will put a lien on your property, and
Who's responsible for those taxes?
well, ultimately the homeowner or the property owner.
The property owner.
The
But
property owner.
sometimes, guys, you got to be careful when you're taking out private money loans because the lender isn't going to pay those taxes always. So you got to make sure as the owner that you're paying your taxes, because
Sure.
I've had that before where they send, different counties will send me notices, you're late on taxes.
Yeah, generally most big lenders,
Traditional banks.
traditional
Yeah.
banks, they recognize that there's a risk for them if the taxes are not paid, so they do.
They handle that.
Yeah, they do. As part of your mortgage payment, they will have the taxes. You will be paying the taxes to the mortgage company, and then the mortgage company pays the taxes. And that's typically how it's done. But there are lenders out there that don't do that.
Yeah,
So you
especially
gotta-
if you use private hard money.
Yeah,
people that
definitely
we
hard
use in
money
the
will not do-
community, you got to
will
make
not,
sure. Yeah.
So it's very important. And so essentially, if people don't pay their property taxes, 2 years after the taxes are owed, the county will sell the tax liens to investors. And there's two pros for doing it. The first is potentially, depending on who's bidding at the auction, the interest rate can be up to 16% per annum on a return on your investment. And tax liens range anywhere from a few $100s to tens of thousands of dollars, depending on the property. And so you have to look at that. But there's really tax lien opportunities for
in every state?
every state has them. I only know the Arizona system.
Because are they all similar but different?
They're
as
similar.
far as-
Some states are, in Arizona, you pretty much need to have an attorney when you get to the foreclosure stage.
Hey guys, quick announcement. I just launched my new Passive Income Accelerator course. In this course, you'll learn how I built my Airbnb portfolio to 10 properties and growing while amassing $3,000 to $5,000 per property per month. If you want to learn more, go to piaaccelerator.com/go and sign up for the early bird special. And now back to the podcast.
Other states, you just contact the treasurer and then they issue you a treasurer's deed, once the time frame for redemption is passed. But Arizona, you need to go through an actual foreclosure.
Excellent. So you learned the Arizona system and how to work with it?
So basically how it came up was in 2009, 2008, somewhere around there when the crash happened, my father-in-law at the time said, "Oh, hey, you should really look into tax liens because you can, wind up getting homes, for a couple grand."
A lot of people don't know this
Yeah,
either because
and
I've been doing, I know I met you 7-8 years ago and you taught me about it, but I never heard about it.
I had never heard of it as a lawyer, and so it's not something they taught me in law school. And so I started looking into it, and sure enough, if you bought tax liens and you made it all the way to the end through the foreclosure process, they have super priority over mortgages and judgments and most other liens that are recorded against the property. And so if you're fortunate enough to make it to the end, you can wind up with a treasurer's deed, and you wind up with title to the property. And so, I learned that. So that was the other pro to it. Was you can either get interest or ultimately you
Get the property, right?
And that's ultimately the goal. And so it depends on the type of property that you're investing in, but I have found, and I've been doing the tax lien foreclosures now since about 2010.
And I love it because you actually invest in tax liens yourself.
Yeah.
So you not only help people with
Yeah.
it, but you are a real example that is successful at doing it.
Exactly. So not only do I represent people in the foreclosures, I have a couple family companies that we do investing and that we've foreclosed on properties over the years. So what I have found is vacant land, you usually have the higher percentage of making it all the way to the end. Lower end residential, typically pretty decent opportunities there. Higher end residential, chances of getting all the way to the end are probably pretty slim.
Because they give people a lot of opportunity, right, to make up those taxes.
Well, you have, you have 5 years from the date the taxes are due until the initial notice can go out by the investor to start the foreclosure process. So there's a lot of opportunity. And even then, once the initial notice goes out and when the foreclosure lawsuit is filed, there's still an opportunity. You can redeem, the property owner can redeem the taxes all the way until the date of the default hearing through the foreclosure judgment process. So there's a lot of opportunity for the property owner to come through and redeem. So, you might hear the horror stories on the news. Oh, property tax liens. They booted out this little old lady. In the 12 years that I've been doing tax lien foreclosures, I've only seen that happen one time. And this little
the media tends to grab a story and just
and this little old lady was not the innocent, little old lady. She was someone who knew how to work the system and didn't want to pay her property taxes and. It's very rare that happens. It's usually people that, maybe they've passed away without any heirs. It's usually people that, maybe they've moved out of the country. Maybe they were an investor and, for whatever reason, just let the property go. I've seen some people that, unfortunately have been on drugs, stop paying their bills because they were on drugs and seen
so there's
that.
a lot of ways that people stop paying on their property. So where, John, would you recommend people watching go to learn about real property tax liens?
So most of the county treasurers have a section on their website and that they have frequently asked questions on there. And so most counties, they have the process on there. But you can also go to my website at scottsdalelawyer.com. I'm with the law firm of Heimson, Goldstein, Pantiliad, and Lohr.
Excellent.
And,
we'll put that in the link for you guys watching where to find John's information.
Thank you. I appreciate that. But I have frequently asked questions on there too that talks about the process. And so there's a couple different ways to go about buying the tax liens. The first way is you can, the counties every year in February and March, they'll have an online auction. Most of the counties, I think, are online now. There might be one.
So you don't actually go down to the courthouse like the old?
Not anymore. Yeah, now it's all online. It's very easy to do. And in fact, most counties they are required by law to publish the list of tax liens that are available an entire month before the auction. And you can go on the website and start actually bidding on the properties even before the auction. It's a blind auction, so and how you bid is your interest rate. So so if you bid, if you want to bid 2% interest, you put in 2% interest on the website, and then if somebody else goes lower, then they wind up with the property. But if you're the lowest interest rate bidder, then you wind up getting the property on the auction website. And then there's other opportunities too besides the auctions. If there's properties that don't sell at the auction, I call them the leftovers. You can go directly to the treasurers, usually in April, May, and they'll have a list of tax liens that are available, and you can buy them directly through the treasurers. And some they maybe have been sitting there for long enough to where you could immediately jump into filing the foreclosure lawsuit if they've been sitting there for 5 years. So yeah, a lot of opportunities.
Is now a good time, John, for people to look into those?
I think any time. Yeah, I think any time is really good because there's a lot of tax liens out there.
16% interest, you were saying, per annum?
Potentially, yeah. So if the way that works is if you're the only bidder or if you buy them over the counter, you're going to get 16% per annum per year on your investment. So if you bought a tax lien that was $10,000, you're going to get a 16% return, $1,600 a year on your tax lien if they do redeem. So the opportunities are there for sure.
That's awesome.
And then the other way to buy the tax liens, you've got the auction, you've got the over the counter, but there are a lot of investors who maybe they're just sitting on them and they don't actually want to do the foreclosure. They're just hoping that the property owner will redeem. You can get a list of who the investors are, and then ask if they're willing to sell you the tax liens. And I've had some pretty good success with that myself, where people have come to me and said, hey, we don't want to do this foreclosure, but we're willing to sell you the tax lien. And so then I bought them and have foreclosed on their property. And
So it sounds like a good niche to learn and to get into. And you teach people that? I know you do a couple of seminars a year on that, right?
Correct. Yeah, I do a seminar usually in December, January, where I teach them the ins and outs of it.
So every year you do that?
Yeah,
December,
every year.
January. So if you guys want to learn,
Yep.
definitely check out John's website and see what.
And then if somebody wants, an individual one-on-one thing, they can schedule a consult with me. I do charge for that, but
Yes, that's your time.
But I can do a one-on-one consultation and teach them how to do it as well.
So starting would just be to go to your website, check it out.
Yeah.
So
a lot of the information's out there already. You just have to read about it and figure out how to do it. So,
but like anything, it's cut the curve. It's better to have an expert,
absolutely,
like yourself,
absolutely.
already doing it that can steer them from like messing up. Because I'm sure there's things that could go wrong. And
there's a
anything.
big laundry list of potential cons for. I mean, you're typically never going to lose your money. You'll get your money back plus interest. Even if like a property owner winds up filing a bankruptcy, you're still going to get your money back. And in fact, if they file bankruptcy, they still have to pay you 100% as a tax lien holder. Real property tax liens have to be paid 100% in a bankruptcy. So even then, the only time I've seen people lose money is there is a 10-year statute of limitations on foreclosing. So if you bought the tax lien in 2008. And you didn't file the lawsuit before 2018, and all of a sudden 2022 you're thinking about foreclosing. Well, you've missed the statute of limitations by 4 years, so you pretty much lost your money. That's really the only time I've seen people lose their money is just not timely acting.
Not knowing the timing correctly.
And that's it. 10 years. So if you don't foreclose within 10 years of buying the lien, you're losing your money. So. But that's rare. I've only seen that happen a few times.
So when I think of attorneys, I think of conflict, I think of arguments. Is that all part of like law school? Because growing up, never really knew attorneys or been around attorneys. And then in real life, as you get your own business, especially in real estate, if you want to do this full time, guys, you need a real estate attorney on your team, because I don't know how many times John's helped me out of a bind, or, I wrote a contract way back in the day. I wrote it personally. I wrote it on back of a napkin, horrible contracts. So make sure you have part of your team, a real estate attorney.
Absolutely.
Is giant.
Absolutely. It's funny, if you go back east, most states, when you buy real estate or sell real estate, you can't do a transaction without having a real estate lawyer.
Canada's like that too, yeah.
And so, you wouldn't and you can't.
It's not allowed, right?
Yeah.
It's closed at the attorney's office.
Exactly. And so out west, a lot of the states out here, California, Arizona, Nevada, New Mexico, a lot of the states out here, for some reason, the attorneys kind of abrogated their role in the purchase and sale of real estate, and realtors do a lot of the work that an attorney might do back east. But it's still not a bad idea to get an attorney involved if there's a unique situation.
Just creative, like a lot of times we write up creative structures like sub twos, we do lease options. I mean, that's
absolutely.
The stuff that you helped me with back in the day.
Absolutely. I mean, the typical residential real estate contract that's been approved by the Department of Real Estate is a pretty good transaction, or pretty good contract.
Solid contract
for transactions, but there might be a unique situation or things that come up that an attorney might still be needed to be consulted on. So it's still a good idea to talk to an attorney when you're buying and selling a house. But
what if people use the thought of attorneys are just too expensive? I'd rather do this on my own, and I know a lot of people just starting out like myself would think that way, but in the end, it cost me more money by,
Yeah.
having to go through the attorney process.
Yeah, especially when realtors start going outside of the box. When
Yep.
they start putting addendums to the contract that they're creating themselves.
And that happens quite a bit in our niche of creative deals. Everyone's battling, trying to get this deal. So
Sure.
who could be more creative in their addendums
Yeah.
and how to write it?
And so, if it's not a standard addendum, definitely something that you want to run by an attorney saying, hey, is this language going to work? In fact, I just had a case earlier in the year that we settled where one of these big real estate companies that you see their advertisements on billboards and on the radio and on TV, and I won't say who they are, but some of the realtors just kind of do things kind of haphazardly. And we had a client that they bought or they sold a house. Actually, they were the sellers. They sold a house that had a solar contract on it.
Okay.
And so they wanted their ideal when they sold the property, and this, of course, is when the market was hot and they could get anything they wanted. They wanted the buyer to take over the solar contract. And the realtor said, oh, yes, yeah, the buyer's going to do that. The buyer's going to do that. And they wrote a very poorly worded addendum. They didn't use the solar addendum that the standard. So there's actually
there's a actual solar.
There's actually a solar
Okay.
contract addendum.
Interesting.
Solar panel addendum.
Because those are big in Arizona. Like solar is like they're leases too, right? You lease
some of them.
the solar, or do you buy those?
Most of them are leases, but
Okay.
there are ones that you buy too. But this one had a lease, and the realtor just wrote her own language in there, and it was awful. And so. Are we out of time? It was a very poorly written addendum, and anybody that looked at it, the seller thought it meant the buyer would take over the solar lease, and the buyer thought that it meant the seller is going to pay off the solar lease.
Oh,
And
so neither one understood.
Because the realtor wrote the language so poorly, and nobody bothered to hire an attorney. And then, of course, they're in escrow, and the buyer's saying, well, I'm not paying this. You were supposed to pay this. It's supposed to come out of your proceeds. And the seller's like, no, that's not what we thought. And the seller, just to get the deal done, they wanted to get the house sold. They had to capitulate. So we had to actually sue the realtor for for not writing the appropriate language, for falling below the standard of care.
So you represented the seller.
No, I was not. I represented the seller after the fact.
Oh, after the fact. Okay.
Not during the sale. If they would have seen me during the sale, before that addendum was signed, I would have said, hey, use the standard addendum. Here's the language you need. This language is not going to fly. This is not going to work. But
the buyer didn't use that standard.
The seller didn't. Yeah, the seller's agent.
The seller's agent didn't. So then they went after that realtor.
We had to go after the realtor. Yeah. And
so realtors, be careful.
Yeah.
There's I don't know how many realtors are in our state now, but like there's a lot of realtors. So, and you were mentioning earlier, John, that as an attorney, you're seeing clients come to you going after the realtors in the middle.
Yeah, especially with what's happening now in the slowdown in the market is, when the things were really hot and it was definitely a seller's market, there were a lot of realtors that were telling their clients, don't worry about the SPUDs, the seller's property disclosure statement. Don't worry about the home inspection. Don't worry about a Benzer,
Right. So a lot of those things were just, like, I know the inspections have been waived. It's very competitive. We want the house.
Yeah. And now what's happening now that the market's slowing and the values are starting to slow down or decrease. People are looking at their contracts, and people are looking at some defects in their homes, and they're saying, well, I didn't know this was here, and but the home, didn't have a home inspection, or the seller didn't disclose this, and
that's a big one. If you're selling property, you want to disclose everything.
Yeah, I absolutely advocate for sellers. Make sure when you fill out that seller's property disclosure statement, you read it carefully. You're answering the questions genuinely.
100%. And your realtor guys who's representing you as the seller, hopefully they're directing and educating you as the seller, because If they're not, you're not with the right realtor, right?
Oh,
Like,
exactly. And you know, one of the biggest things that I do a lot of failure to disclose lawsuits, and one of the biggest areas that the sellers fail to understand is there's a lot of questions that may say something like, do you now have, or did you ever have roof problems? Do you, or the pool, did you ever have problems with your pool, either past or present? That's past or present. And so a lot of sellers will say, well, I don't have anything wrong with it now. I don't need to disclose that I put, a new roof on, 2 years ago.
Right.
Because of the rain damage or something. And so, but a buyer needs to know that information.
100%. And
so,
again, that you're looking to the expert, the realtor,
Exactly.
because you don't do this every day as a seller if you're just a mom and pop selling your property. So that is what I'm saying. Get with an educated, experienced realtor who knows the law, because that's the worst thing if they come after you after the fact. I just had a situation where I put a property up for sale. It's sold in like 2 days. Bread and butter, $255,000. They did their inspection. During that time, I don't know if we had rain or what, but there was a leak. So, now there's negotiation. They come back, ask for things. I told my realtor, just offer them X amount and 2,000 or whatever for all the repairs, so we didn't have to do them. But they ended up canceling, which, time-wise, for whatever reason, we had the leak right during their inspection. But my realtor said, let's take it off the market, Flip, and we fully need to disclose this fact that you had water damage at this month. I'm like, 100%, Brett.
Great advice.
You're right. You're right.
Yeah.
As soon as we get the next buyer, we're going to disclose that fully in the spuds, because that's the last thing we want, someone to come back at us for mold or something that you didn't disclose as the seller.
Absolutely.
So,
So the disclosure is very important, and but like I said, a lot of realtors were telling their clients to waive it, to waive disclosures, waive home inspections, which is just, in my mind, just your home for a lot of people is one of the largest investments they're ever going to make.
100%, yeah.
And why wouldn't you want to know what's going on with this? You're not going to go out and buy 100 shares of some stock without knowing what's going on with that company. Why would you not want to know what's going on with your home?
For sure, yeah.
So I have a feeling, and like I said, I've had a couple clients consult with me in the last few weeks about how their realtors didn't advise them, saying, hey, you should have this done. The realtors were more interested in just getting the
sale, pretty much the commission. Yeah. So again, I deal with a lot of investors that we also do with realtors, but I feel like realtors should, they have to take their classes and their credentials and stuff, but it seems like they would want to get with a good real estate attorney too, to have on their team as a realtor, so these problems don't occur, just to protect themselves.
Yeah. So if a realtor or a broker came to me and said, hey, we want to get this sale done, should we advise our client to waive the home inspection? I would say absolutely not.
Right.
Should we waive the seller's property disclosure statement? I would say absolutely not. And if you do, you're probably falling below the standard of care for a realtor, and you're probably going to wind up getting bit in the booty later on when something is found, and you're going to wind up getting sued.
Details always matter. Just from experience, trying to writing my own contracts, like I did it early on, and it was a big mistake. That's how you and I met 8 years ago, to help me out of that West Side deal. But
and I did, by the way.
You did. You did. We ended up getting the best situation that we could with that one. So that's how we met, through that. What is going to happen now with the market, John? I know that we don't have a crystal ball, but you're seeing some shifts. You mentioned the prices we've had 27% appreciation in Arizona last year. So, that went straight through the roof. So stabilization is probably good for locally, the economy, I'd say, or what do you think on that?
As a home seller, obviously, I think there are some concerns, with interest rates going up, money's tightening up. And so I think we're seeing kind of the trend that homes are staying on the market a little bit longer over the last few months, and maybe people aren't willing to, take out that 30-year fixed with a 5-6% interest rate. So so I think we are going to see a little bit of slowdown. We're probably going to see maybe home prices come down a little bit, not dramatically like they did in the crash, but I think maybe a little bit. I think we're going to see less and less of we saw over the last 2 years, sellers were getting over asking price. I don't think we're going to see that anymore. I'd be shocked if we still continued to see that.
And we got spoiled too, again, where properties were selling like overnight, and like that's not a normal cycle though, right? That's not.
Well,
in your 23, 22 years, that's
exactly
an anomaly. Yeah.
Exactly. Well, and I personally, I was thinking about buying a home about a year ago, selling the house that I had owned, or that I own still, and so there's another neighborhood right pretty close to where I live now, and it has nicer homes than what I currently, or nicer, newer homes.
Uh-huh.
And so my wife and I found a home that was for sale, and they were asking like $675 for it, and we put in an offer. I talked to a realtor, talked to a mortgage company, and we felt the price was overpriced, and so we wound up going in and trying to make an offer for like $625. Which we found out was a mistake, but they ultimately sold it for like $50,000 over their listing price. And so
when was that?
That was a year ago.
Okay, so so interesting to fast forward.
Now
a year.
I guarantee you they wouldn't be doing that.
There was one in Scottsdale that we were looking at, and right before our Coronado trip, Old Town Scottsdale, we're going to make it into a one of the Airbnbs down there. And at the time, it was $750. As soon as I saw that deal, about a week later, 4 other homes went on the market in that neighborhood at $625, or approximately that much. So that seller had to come way down on their price, because just within that time period, the market in that area, like other people were listing, and it just dropped their value too.
And there's opportunities still for, obviously I'm not a lender, but, I know that there's opportunities for still low interest rate loans, so you can get an ARM and, a lower rate, and then, maybe when the economy improves and interest rates go back down, they can refinance.
That's a good strategy to get into a property, for sure.
But, obviously they need to talk to a lender about that, but the concern obviously would be that if the interest rates don't go back down, then you're stuck with maybe an ARM that's is fixed to the the national rate, and then you're paying a lot more a couple years down the road. So you do have to be careful with that. So
hey guys, quick announcement. I just launched my new Passive Income Accelerator course. In this course, you'll learn how I built my Airbnb portfolio to 10 properties and growing, while amassing $3,000 to $5,000 per property per month. If you want to learn more, go to piaaccelerator.com/go and sign up for the early bird special. And now back to the podcast. I mean, back in my dad's day, I think 18%. They paid some 22%.
Still better.
Some crazy rates back in that historic.
I think my dad, when he bought his first house in California, I think that's what the interest rates were in his
similar.
Mortgage, so,
but they were paying $12,000 for $20,000 on a house. So
much cheaper.
Much cheaper. Yeah. So, as a career, John, if someone's considering law school, or like, what are your thoughts for a young person? Obviously you're advising to go to higher education, because you grew up quite a bit through there. You learn how to learn, and but if they want to, target like yourself, starting at a young age, you knew you wanted to go to law school. What would you tell someone?
Keep your grades up. Look at the long term. Get a good mentor. Someone, if you're really thinking about law school, maybe talk to family and friends and see if they have a lawyer friend that actually enjoys the law.
Right, right.
Enjoys the practice.
Because when you think of law, like you think of divorce attorneys.
Yeah,
you
there's
think
plenty of
like
attorneys
those
out there
kind
that
of
don't enjoy
attorneys.
actually being an attorney.
Right,
So make sure
right.
you find a good mentor that actually enjoys being a lawyer. I do enjoy being a lawyer. I mean, it has its ups and downs some days, but for the most part, I enjoy
You
doing
found
it.
something you really like.
Yeah, when I help people. I feel like I like helping people, and the income's not too bad either. So
Absolutely.
So yeah, it's
And now you have your own firm, you had mentioned?
yeah. So I started off as an associate attorney, 12 years ago with the law firm that I work for now, and at some point I became a partner, and I have two other partners in my firm now, so it's just the three of us. And
Awesome.
then we have.
Is it all real estate?
No. So we have a few associates that work for us too, but my primary area of practice is real estate law, real estate litigation. But I do a little bit of intellectual property law, like trademarks, copyrights. I do some construction law still, although very rarely. And then our firm does personal injury. We do wills and trusts, probate, some employment law. So we do a wide variety of things.
Uh-huh.
So, yeah.
And do you actually mentor young lawyers wanting to get into the business? Or?
I have done that in the past. Yeah,
Uh-huh.
if a young lawyer contacts me, and we've had some interns that we've mentored, young associates, but also just people that I have mentored. I met someone at the bar convention a few years ago, and they asked to be mentored when they were in their third year of law school.
It's the
and
best way to learn.
studying
Yeah.
for the bar exam, and so I was able to help them out, and so yeah, occasionally I'll get calls like that. So
That's cool.
yeah.
That's cool. So, do you remember a mentor that helped you with?
Yeah, see, that's why I do recommend a good mentor, because I did not have one. And,
Okay.
And I think I would have saved myself a lot of grief and aggravation if I actually had a good mentor.
Right,
That's,
right.
that's why I see the value of being a mentor to
Grief
others.
meaning like trying to figure it out on
Yeah,
your
exactly,
own.
exactly.
Yeah.
Really trying to figure it out, and so I really wish I would have found a good mentor. When I was going to college and law school, and I really didn't do that. So
Yeah. Now mentoring people, it helps them, and I really enjoy
Yep.
helping people learn about real estate. You enjoy the law aspect, so it's pretty cool. And also I want to compliment you because you, like, I know some lawyers out there, but they're not into networking. I noticed, when we first met, you came to all the events and you always showed up, which, I know you're busy as an attorney, you have
sure.
a lot of clients, but you made time for networking. Has that always been like something you were involved in, or how did you start doing
So
the
yeah,
networking?
I really started networking probably in about 2006, 2007. Do you remember the Buffini program? Did you ever
I'm
have
not,
any
not
part of
familiar
that?
with that one.
So Brian Buffini, he was, I think he still has a real estate program out there, but
The name sounds familiar.
yeah, so a lot of
Uh-huh.
realtors go to that, or used to. And so one of my former partners was really into the Buffini program, and advocated that our firm do it. And so we kind of adopted the Buffini program for ourselves, and do they have like a client appreciation program where they send out items of value every month and write letters to their clients, and so we started doing stuff like that, and yeah, so then I started branching out from that to going and speaking before real estate companies and brokers and their realtors, and yeah, so I like to get out and shake hands and,
Yeah.
and see the people and
Yeah.
meet the people.
The
So
old-fashioned way. I think
Yeah.
sometimes like professionals get so busy, because I know you sit as a judge too, right? From time to time? or-
Occasionally, yeah. I'm
Uh-huh.
also a judge pro tem, part-time judge for Maricopa County Superior Courts. And so, yeah, probably like once a month I'll do a settlement conference or sit on the bench. But usually the settlement conferences are more what I do.
Uh-huh.
But yeah, I donate my time. I don't get paid for that. And so, yeah, it's a good system. I mainly do it because You know, I have a judge badge, so it's my get out of jail free card. So.
Oh, there you go.
Just kidding.
Yeah, I didn't know how all that worked. That's cool.
Sorry.
That's cool. So we're going to wrap it up here, guys, but is there anything else you would want to share with the audience and let them know as far as cutting the curve and, you know, the whole real estate industry and what you're...
Yeah, you know, just remember, you know, when you're doing a unique transaction that's outside the cookie cutter, you know, make sure you talk to an experienced real estate lawyer.
That's big, yeah.
Like myself. Also, you know, if there's an opportunity to learn more, if you want to learn more about the real estate tax lien investing, you know, reach out to me. There's a few ways you can do that. We have a website at scottsdalelawyer.com. I'm with the law firm of Heimson, Goldstein, Pantilli at Lohr.
And how do you, use the letters, because that's a little easier for me.
Scottsdale-lawyer.com. So.
Scottsdale.
Oh, you mean my law firm?
Yeah, yeah.
So Heimson, Goldstein, Pantilli, and Lohr, HGPL.
Okay, because all I remember is trying to write that on the check.
Yeah,
I'm like,
HGPL.
HGPL.
Yeah.
That was much easier, but that's great. You have partners, and like we're all about teams too, because you can't do everything, right? So providing value to your clients that have other things going on.
And I have a good team in addition to my partners who do other areas of law. I have my own personal team that works for me. I have 2.5 legal assistants plus a probate paralegal, and then I have 2 associate attorneys, and then and another attorney who's about to take the bar exam that work for me, and so I have a good team that handles all my assists me with all our tax lien foreclosures and real estate litigation. So.
Just, I know anytime we did anything, John, the communication, you guys, your team's always communicating, which
it's key.
Made my life easy.
It's the number one bar complaint for lawyers is not communicating with their clients.
Interesting.
And so we take pride in the fact that we are very prompt when we respond to our clients. We have an office policy that you have to return phone calls within 24 hours. We usually do that in less than that.
Yep.
You know, but you hear about people all the time. My lawyer never calls me back. My lawyer never emails me back.
Right.
And so
I don't know what each client is worth to you, but for me, it's always been like work with those people and keep working with them instead of trying to generate more clients.
Exactly. And my clients mainly come from referrals and word of mouth.
Yep.
And so if I'm not, servicing my clients well, they're not coming back to me, and they're not referring me out.
Yeah, and that's the best business is referral business.
I would much rather have the referral business than some person that found me on Google. So.
For sure.
No offense to Google, but
right.
Yeah.
Well, I learned a ton today, John. Thank you for being here on Cut the Curb. You guys, I hope you enjoyed episode 7. Share it with your friends, your family, like it, and then we'll definitely put John's info in the podcast here on YouTube, the Airbnb climb, and then this has been great, John.
Great. I've enjoyed being with you.
Learned
Thank you.
a lot, and hope I don't see you too often.
Well, hopefully on positive things. So.
Just on growing the business.
The next multi-million-dollar deal that you have, you need me to review the contract.
For sure, because we're scaling up, and this luxury business will be something I'll be talking to you more about. So great having you, John, and take care, guys. See you on the next Cut the Curve.
Thanks again.